All right, now let us begin to getting into some background work on how to begin trading. I understand that there are some people who are like intermediate level, so they really don't need the beginner level. But I do have some people that have never day traded before, so I have to go over some of the basic stuff. And if you are a new beginner, some stuff, I just can't cover every new beginner's thing. I'm gonna have to do a little bit more research for yourself, and this is actually good for you. It ties back into when I said I just can't cover every beginner thing, but I'm going to cover some of the important things that I feel like you should know as a beginner. Let's get into it. So the first thing we are going to talk about is what professional traders do. I can classify myself as a professional trader. I was able to get a funded account with a prop firm, showing my skills, being able to create profit in the market. So, what do professional traders do? Take notes on this. So, what do professional traders do? So, professional traders, they don't just enter anywhere in the market. There are key areas that professional traders like to look at. So if you ever been on TradingView, in which I use TradingView to mark up my charts, it shows the numbers on either the left hand side, right hand side. I think you can change them depending on your preference, but mine's are on the left hand side. There's going to be numbers on the side, whether you're trading the currency market, indices, commodities, or stocks. All of them have numbers. And these numbers are very important because at certain points, price, which in this case, if you don't know what price is, that is the candlesticks. We call those price. And I will dive more into that as we get to that section. We're just going to call price the candlestick. So when those candlesticks get to certain areas of those numbers, that's when we can see reactions. Professional traders, they execute trades on psychological levels on the graph. For example, these are psychological levels like whole numbers and half numbers on the graph, even quarter points. So when we look at whole numbers, we can think of like numbers like 127.000, 128, 129, 130, 131. Those are all whole numbers. And then when we want to think of half numbers, we can think of 127.500, 128.500, 129.500, and so forth. And then when we look at the quarter points that are in between those, we have 127,250, 127,750, and then it goes to another quarter point, 128,250, and then 128,750. Now, if we want to look at these all in sequence, think of it as dollar with four quarters. You have 127, 127, 250, 127, 500, 127, 750, and then back to a whole number. All those numbers, you can see reactions happen off of those numbers. For me, I only like to look at whole numbers and half numbers. So for whole numbers, I can see potential reverses off of it, to go for price, or in this case, if you're a beginner, the candlesticks to go in another direction. So I'm looking at half numbers as, for example, 127,500, 128,500. I know that these areas are areas where price likes to maybe hesitate at before going to another area. But I'll go more in depth as we get further into it, so we don't have to think. Don't think too much on it, but we're gonna get to that point when we get to that point. But just keep that in mind. Next thing that professional traders do is they don't always trade the same. The way I was trading a year ago isn't exactly the way I'm trading now. My basics of how I trade is the same, and a couple things are the same, but it's never too much different, but it's not always going to be the same. Like I say, I'm a scalper, but sometimes I might intraday. Sometimes I might see a swing opportunity. That's things to keep in mind. The next thing a professional trader does is they keep and know their stats. So a professional trader knows their win rate. They know what days to trade and what days they might lose the most. And they also know what instruments to trade that they know they don't lose a lot, that they win at. So for instance, me, I don't trade Bitcoin. I found myself losing a lot when I traded Bitcoin, so I don't really touch Bitcoin a lot. Like I don't day trade that. Even when I see a clear move, I'm like iffy on taking it because I'm like, I don't do good trading Bitcoin. I don't want to trade the currency market. And as well for indices, I could trade indices, but I'd rather trade the currency market. But just knowing your stats and knowing your routine of what you trade. The next thing, not attached to the money. In trading, you cannot be attached to the money. If you're attached to money and you're scared to lose money in this market, you will never, ever be able to have $1,000 days, $2,000 days, even to get to $5,000 days. Like if you when you see these traders get to $10,000 in a day, you know sometimes these people risk like $3,000 to make $10,000. If you're not ready to see those type of numbers, or you're scared and attached to the money, you'll never get there because you'll always be scared to lose money. And in trading, you're gonna lose money some days. But the thing that's gonna keep you afloat is your risk to reward and sticking to one strategy. The next thing that professional traders do is they have a routine. I feel like you need to have a routine when you trade. Know when you're trading. Know when you're waking up to trade. If you know you're supposed to trade at 8 a.m., why are you waking up at 12 p.m.? Why are you not going to bed on time so that you can have a clear mind to trade the financial markets? It just doesn't make sense. So have a routine because a routine also creates discipline. And in trading, you need discipline because when you don't have discipline, you don't follow your trading plan, you end up over leveraging your money, losing it more than what you should. The next thing is not scared to take the next trade. And this is a big one. Let's say you lose 2 trades in a row or you lose a trade. Are you going to be scared to take the next trade? If you don't take the next trade, how do you know that next trade isn't going to be a winner? You see your setup happening that you practiced and you've studied for, but you're scared to take the next trade because you lost the last one. Well, you can't be scared to take the next trade because you don't create any type of consistency because you're scared to take your setup routine. So don't be scared to take the next trade. The next thing we're going to talk about is what moves the market. Well, these are the things that move the market. Institutions move the market. Banks, hedge funds, pensions, mutual funds, and corporations. We call these people the big dogs in the market. When you see in trading, when you see on your chart and you see these big sporadic movements happening, like you might see a big candle happening. That didn't happen for a reason. The big players are getting into the market, and that's what you want to be looking at. And the next thing is retail traders. Well, as retail traders, which is a majority of us, that's small trading firms, independent traders, and investors. We don't really move the market like the big banks, hedge funds, and all those people do. We are trying to capitalize as retail traders. We're trying to capitalize off of the moves that the big banks and all those people are making. That's what you want to do. So how do I know when I want to enter the market? Well, just from a previous slide, when you see those big banks and you see those big movements in the market, that's when you know the big players are in the market, and that's when you want to be in the market. That'll all make more sense as we dive deeper into this learning coursework. That's when you want to enter. Okay, so the next video will be about price action and how to read candlesticks.